Welcome back to Instables, everyone. Again, going over our intraday swing and long perspective as we sit on our symmetric triangle here, looking to see if we will get that proof of concept to continue on higher leading into next Wednesday's CPI and Fed minutes. Again, very much going to predicate where exactly we head. Will we hold any possible bearish momentum that we get from that data, or will we continue on higher with that data? Will be the question. I'm going to go over exactly what that proof of concept would look like and what we're looking for going into next week. Hit the like button if you enjoy, subscribe if you are new to the channel, and if you are a day trader, if you want to see pre-market news that you want to be watching, if you're looking for data sets that you want to be watching, for example, 30 minutes before market open, the market very much does react to certain data sets and you didn't know that they were coming out, or 30 minutes after market open, if you guys are trading out the gate movers, or just looking for those major volatile breakouts on news that we mention every single day in the Instables room, go to instables.com in the description below. And for only $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into the spot with you guys here, looking at our intraday perspective off the bat, what I want to mention here is that we are very much just below a possible breaking point. And again, this is our symmetric triangle that, again, we have not very much mentioned, but I wanted to make sure we did mention because we're very close to possibly breaking out here. Again, just below our upper trend line here for a possible break and a possible gap to, again, the upper end of our trend line here that we would be testing. This would be our possible first price target. Again, that would be that possible break on our symmetric triangle here. That would be exactly the play. And if we are looking for that possible continuation, what I would be looking for is a possible retest, again, on the upper end of our symmetric triangle for that proof of concept to continue on into our prior gap down that we had here. So again, that is going to give us possible room to run to the upside. That would be our next target and our next proof of concept that we would be looking for. So again, as we anticipate our intraday momentum, making sure that we keep that in consideration with our 20-day below our 50, looking to see if we continue to respect our 20-day will be that possible confirmation, in my opinion, above our symmetric triangle into those possible gap ups, and then looking again for that possible proof of concept for that next target if we are going to continue on higher again into our prior gap down. So we will see if we get that proof of concept into our second gap up, if we get that proof of concept above the upper end of our symmetric triangle that we have here on that possible first target if we continue on higher here. And again, looking for that proof of concept on the upper end of our symmetric triangle will give us that confirmation on that possible momentum to the upside here, our next target. So again, that is the watch. That's what we're looking for here intraday, is to see if we will possibly, in my opinion, retest our 20-day as we lead into CPI and Fed minutes next week. Again, we do sit on a spike here, but very much testing prior resistance, sitting on a hammer candle from yesterday. So we did have strength to the upside. Again, mentioning a small bounce to actually put exactly this candle out. So we're going to see exactly what happens here. In my opinion, we're looking for possible engulfing candles to the downside to see if we can get that continuation intraday to the downside. But in my opinion, if you're looking for that larger move, like I said, looking for that proof of concept to continue to respect our 20-day moving average to the upside as we cross back above our 50-day moving average will be that confirmation on that first target that we're looking for. Now, looking at the weekly chart, what we're looking for as far as confirmation on that swing momentum is going to be if we do hold our 0.786 fib here. As you guys can see, our 407.42 level, we're still holding this on the weekly chart. If we continue to hold it, then we can still possibly continue on with the flag here. So again, we still have a possibility of continuing on higher. If we hold our 407.42 level, this will be the watch as we're anticipating CPI and again Fed minutes on Wednesday. That could turn out to be any momentum that we do see. So in my opinion, as we test prior resistance, as we still do need to respect our 20-weekly moving average to get that confirmation on that swing momentum as well, not only on the daily but on the weekly, looking for confirmation. We either will possibly flag to the upside, get a possible rejection and get that retest, or we will possibly continue on below this fib here, and that will be that intraday momentum short term to the downside, but looking for that swing term momentum on that possible bullish candle structure, again an engulfing candle covering our prior body's candle, or we do hold our 407.42 level here, and then we do possibly get a Morningstar setup on a possible pullback, a doji candle coming out, and then possible strong momentum candle to the upside will give us a continuation here. So again, that would be our possible Morningstar setup. We'll see exactly which setup we do get, but very much anticipating next Wednesday's CPI and Fed minutes as we are testing prior balance levels here. So again, we'll see exactly what happens. Again, looking on the weekly chart, we have been locked in here, making sure that we were keeping an eye on possible bullish momentum. We did get back above our 50 weekly moving average. We had a bounce back after dropping below our 20 and our 50. we mentioned we still could possibly bounce back since we did not get any bearish candles set up to the downside. And sure enough, now bouncing back, looking to see if we will get that bullish candle structure set up to the upside here. Again, making sure that we retest our 20-day moving average and look for confirmation will give us that possible continuation on our weekly chart. Now on the monthly chart, as we retest our 20-month moving average with the doji candle still here, again, still closing this candle on the month. So again, we're going to see exactly how this candle closes, but very much sitting on a doji candle, indecisive where we may be headed next, but very much sitting just above our prior candles open. So again, if we continue on below our prior candles open, which is almost exactly again at that 0.786 fib on the daily chart, then we can possibly continue on into our prior bodies candle. So you can see the overall picture here. Again, our daily chart looks a certain way, our weekly chart looks for confirmation, and then our monthly chart with room to run to the downside if we can't hold that fib line. Very much making sense here, hopefully overall, if that makes sense. So what will give us confirmation on our long-term momentum here on the monthly chart is looking to see if we can close above our 20-month moving average, if we can get our 12 and our 26 EMA on our MACD to cross back higher here. Again, very close. Again, curling up very, very close here, guys. You guys can see very, very close to curling up here. Very, very, very close. So again, this could be that swing and possible short-term, mid-term momentum. Again, we could possibly continue on lower with that sell pressure that we have been getting. That could be that possible, again, short-term momentum to a major recession for all we know. We'll see exactly what happens, but very much looking for that possible confirmation. We will see exactly what data comes out on Wednesday. We'll see exactly what CPI comes out as. Now to recap on our intraday perspective, as we do look for confirmation leading into this next week, again, retesting our 20-day moving average will be the narrative that we do need to keep as we do look for confirmation on that swing term momentum. So again, as we are not retesting yet, we will be looking for that retest and looking for that larger reaction into our prior gap downs that we had, again, with our resistance that we have here from our prior resistance and also from our prior gap downs that we had with possible room to run to the upside if we do continue on above our symmetric triangle again. Now, lastly, what I wanted to mention here and why we have a possible break on our symmetric triangle and why we may have room to run to the upside if we get that bullish CPI and again, bullish Fed minutes is because we have not been in overbought territory since we got our divergence. Again, we mentioned our divergence quite a while back. That was when Nick Timiraos mentioned that possible Fed pivot. We continued on higher, never jumped into overbought territory, still did not jump into oversold territory, and we still are with that possible narrative of jumping into overbought territory, and that could be that break again on that symmetric triangle. So very much keeping this on watch, especially like I said, once again, with our weekly chart, our candles above our 20-weekly moving average, our 20-weekly moving average above our 50 that we have not had in the last year. Just again, keep this on watch, guys. Looking for possible retests and confirmations to the upside will be the watch from here. If we have any major bearish momentum, we'll know exactly when that happens. But again, confirmation will stay key as always. And a lot of that confirmation could come from increases in buy pressure here as our EMA lines are crossing above the median over MACD on our daily chart. So again, looking for possible increases in buy pressure will give us more confirmation on strength here. We will see exactly what happens. Again, watching our symmetric triangle will be the overall watch. Making sure you keep an eye on that possible retest if we do continue on above our symmetric triangle for that possible bullish candle structure. Setup will be key as well. Now, again, with that said, if you are a day trader, if you're looking for pre-market news that you want to be watching on major volatile movers, major data sets that are moving the market that you may not be watching, go to instables.com in the description below. And for only $15 a month, you will never miss a breakout alert today again. And again, all of you Instables, I appreciate every one of you guys for supporting the channel every single day. I hope you guys have a blessed Good Friday. Hope you guys have a blessed weekend with your family and friends. Much love to every one of you guys. And if you guys do like this video, it does help the channel grow. And I do appreciate it very much. And again, God bless you all. And I'll see you guys in the next video.